Hello everybody, it's fantastic that you've been able to join us for the 2020 SproutX Demo Day. I hope you and your families have been able to stay safe during this really challenging period. I'd like to start by congratulating Julie and Chris for delivering yet another fantastic program at SproutX. And well, what a year it's been. Predictably, the impact of COVID-19 on our industry has been substantial, with a definite pulling back of investment levels as many investors waited to see how things would pan out, quite reasonably. Having said that, we've also seen a few trends accelerate during this period. For example, online food delivery is one of them, is a huge increase in home ordering during lockdown. And that's resulted in investors flocking back to the space, as we've seen some big ticket investments over the past 6 months. The movement to increase local food production and supply is also accelerating. This has seen an increased investment in controlled environment ag and the associated enabling technologies, as more and more investors are seeing the many benefits of local production in not only environmental impact and food quality terms, but also as well as the obvious food security and availability benefits. Similarly, the role of food in staying healthy has also become a major focus. With the onset of COVID, we saw many sufferers of food-related diseases like diabetes being among the worst affected. That's really sort of brought the attention of investors through to our space, and we're seeing more money come into that food as medicine part of the market. The need to digitize and rationalize the entire value chain has never been more important. This was particularly evident in emerging markets, as we saw enormous waste and even increased starvation as a result of faltering supply chains. But it was also a major problem in developed markets. As food service shut down, we found our supply channels couldn't be altered quickly enough to alternative markets. So there was enormous waste. Big example was the dairy industry. Certainly in America, saw a lot of wasted milk as a result of food service being shut down. There remain so many problems to fix in our global food system, so many challenges ahead with climate change. And these things are working to impact on our ability to sustainably produce food. And as a result of that, it's never been, in our view, a better time to invest in agriculture and food technologies. So what does the investment landscape look like in agri-food tech for 2020? Now, we'll be releasing our latest report in February next year. But the figures we're seeing at this stage, and it is early, we're still working through the figures, definitely show patchy investment levels. While some sectors are accelerating, others have seen substantial declines. As far as total investment levels, they look likely at this stage to come in around 20% below the 29 figure of 22 billion, and that's a global figure. Given the disruption we've seen this year, that's actually not a bad result, we think. Activity levels have generally been pretty good. We've seen VCs taking advantage of COVID-impacted valuations. It's not been so great for the startups, but in a market like this, getting investment is far more important than the valuation at which you receive it. But in some markets, we've seen valuations drop by up to 30%. But it's recovering. There have been some conspicuous winners. Funding for what we call midstream tech and innovative food, especially alternative protein startups, has been good and has accelerated significantly this year. That's obviously been bolstered by COVID-19's threat to food supply chains and the largely negative impact on the meat industry that we've seen, with a number of meat processing facilities, certainly in the US, shutting down as a result of COVID-19 and disruption to the supply chain. And while we're hopeful the level of investor activity will continue to increase, the repeated lockdowns will be a big concern and are a big concern for the global economy. So we just need to watch how that trend develops. But we're expecting that, all things being equal, investment levels will continue to rise and we'll get back to a level of normality, hopefully sometime Q2, maybe Q3 next year. So looking a little deeper, and breaking it out a little bit, midstream tech, which I mentioned earlier, which supports food logistics, supply chains and traceability, has done pretty well, largely due to the high demand in the current environment. Innovative foods, which, as I mentioned, includes a somewhat frothy alternative protein category, has easily surpassed its total funding for 2019. Surging consumer demand for these products has played a key role in this. And as a result, it's drawing VCs, generalist VCs, into the space, obviously because they see the much bigger markets where consumers are involved, purchasing these products and developing these brands. But the fundamentals still apply. The team needs to be world-class and the product needs to taste fantastic. But if you can tick those boxes, you're going to raise a lot of money from venture capital. AgBiotechnology has done well and is on track to easily beat its 2019 total of 1.1 billion. I'm not going to say what it'll get to, but it looks like it's easily going to surpass that. Like many innovative food companies, AgBiotech is capital intensive with long development cycles, which can be difficult for VC investors with a limited fund life. But there's a very, very strong need in the market for new crop varieties and on-farm treatments, particularly those with a reduced or little environmental impact. Sustainability across the entire food value chain is increasingly becoming a key investment criteria for most investors. And that's really a reason for the launch of our own Grow Impact Fund at AgFunder. On the downside, investment in farm management software, sensing, IoT type technologies is down this year and looks likely to fall well short of last year's investment levels, maybe by as much as 50%. This is a particularly tough category at the moment, as it is very domain specific. And you need to have investors who understand farming and understand the sector. And many of the ag special investors have already made their bets and are waiting to see which winners emerge and how the category evolves before backing up and looking at new alternatives or looking at new technologies that are emerging. Looking forward, we see continued interest in the categories that have done well during the pandemic. Midstream technologies that I mentioned, ones that are delivering efficiencies and resilience to the supply chain are going to do well. Alternative proteins and new innovative food categories that are driving human health, they'll continue to attract good investment, as will biotechnologies that will help reduce environmental impact of traditional ag while driving on-farm efficiencies. And that's always got to be the goal, solving big problems for farmers, big problems for the supply chain, and big problems for retailers on the consumer side. Similarly, with labour shortages and high costs continuing to be a major impediment to farm production, we see robotics and automation as an investment focus for smart investors moving forward. So all up, in a challenging year in which agri-food technology really stood up well, yeah, we think that next year is shaping up, and you know, we're very bullish about next year. We think that we're going to emerge from this with a real focus and a real understanding within the market of the need to improve supply chains and to invest in technology to do that and to make emerging markets more resilient, our own supply chains and our value chains more resilient and obviously more sustainable. I send my strongest congratulations to every team presenting tonight and wish them well for strong growth in 2021. I've spoken long enough, so now without further ado, please welcome to the virtual stage the SproutX cohort of 2020.